Welcome to Data Leaders Podcast. I am Deval Bhatt, and this is where I sit down with top data thought leaders and extract really meaningful insights and actions that you can apply to your life and work to help you achieve your dreams and goals. This is where data and intuition meets decision making. Welcome to another episode of Data Leaders Podcast. In today's show, we have Scott Wentworth joining us. Scott is a founder of Wentworth Financial Communications, which he founded after spending 11 years as a writer for William Blair & Company, a global investment banking and asset management firm based in Chicago. In addition to being a head writer for Wentworth Financial Services, Scott also focuses on helping financial services companies implement inbound marketing and content marketing strategies. Scott is an adjunct professor at Northwestern University, where he teaches graduate-level courses in accounting, finance, communications, and persuasive messages. Couple of fun facts about Scott is that he was born on a corn and a soybean farm, and he grew up with farmers, which he's very proud of. And second interesting thing about Scott is that he's building a startup company as well as a startup human at the same time. In other words, Scott is raising a 9-month-old baby whose name is Evan, so he is building the little child as well as the startup at the same time. Quite a challenging life. Scott, thanks for joining the show.
Thanks for having me, Deval. I am thrilled to be here, a big fan of the podcast, and I'm excited to share some ideas with you and your audience. So thanks for having me.
Yeah, it's great to have you here. Let's start off with top challenges and opportunities that financial marketing leaders are experiencing these days, and what are some of the things that keep them up at night, in your opinion, from having worked with people in that space?
Sure. In my corner of the financial marketing world, the thing that I see causing a lot of angst or worry for financial services companies is this need to differentiate themselves and avoid the commoditization of their services. So I'll give you a couple examples of what I mean by this commoditization of services. In the private wealth management world, they're dealing with the rise of robo-advisors. So a lot of companies are launching these algorithm-based trading platforms and wealth management platforms that automate a lot of the services that a financial advisor used to provide or still does provide. But the rise of these robo-advisors, quote unquote, is becoming a really big threat to a lot of the financial advisor private wealth management space. And it's based on this idea that a machine can replicate the same sort of portfolio management and asset allocation decisions that a human would do. And so because of that, anytime there's this disruptive technology, it creates pressure on the margins. So there's in that space, there's a lot of pressure. How do you fight off this robo attack, and how do you protect yourself from becoming a commodity? Another example is in the institutional asset management world. There's this ongoing shift that's happening, that has happened over the last 10 years, of assets moving from actively managed strategies toward passively managed strategies. So rather than hiring managers to generate alpha and beat the index, a lot of investors over the last decade or so have decided that they're better off paying lower fees to go with an index-based fund that just tries to mirror the index, and all the return comes from beta. And so there's a lot of assets are flowing toward these passive strategies, which obviously puts a lot of pressure on the companies that do pride themselves or built their business around doing active management and being able to generate alpha for their clients. So those are two very stark examples of the sorts of things where in the asset management world, companies are worried about getting commoditized, or because of shifts in market preferences or the perception of their value, that's putting a lot of pressure on those companies' margins. So what I see a lot of companies trying to do is differentiate themselves in a world where a lot of the services can become automated or commoditized. So how do they use their intellectual property to differentiate themselves? And where it affects me, or where the rubber meets the road for me, is how do they use content marketing or thought leadership to do that? And one thing I really encourage a lot of my clients to do is, whether in the private wealth management world or the institutional asset management world or other areas of financial services, is really what you're selling is your intelligence and your unique view of the world and your ability to execute on that view. And so the more that you can articulate that view and articulate that expertise, the more you can protect yourself from that commoditization. So getting back to the private wealth management example, again, there's advisors are trying to fight off the attack of robo-advisors. And so one thing I say to do that is your best weapon in protecting against robo-advisors is your voice. And that's the one thing that a robo-advisor simply can't replicate, is that personal interaction and your ability to talk the client through difficult situations and that human relationship that give an inside look at the company and the way that you're thinking about things, or video or other forms of content marketing. But really what I encourage my clients to do is find ways to articulate that voice so your clients realize that is a huge part of the value that you're providing. You're not just providing portfolio management and asset allocation decisions, things that a algorithm could do to some degree, but you're really emphasizing and showing those things that a machine simply can't do. In the institutional asset management side of the world, one thing I really emphasize for my clients or encourage them to do is if you're really worried about this shift away from active management, one thing you need to do is you need to really sell people on the idea that you have a unique point of view and a unique investment thesis that will allow you to generate alpha. And unless you can articulate and explain that point of view and that investment thesis, there's no reason for investors to believe that you can beat the market. And so I really work with clients to help them think of ways, well, how do we articulate that thesis and explain it so that the investor can say, yes, I understand this point of view in the world and I see how they can execute on this. And so it is worth it for me to pay the higher management fees to pursue that alpha. And so a lot of times it takes the form of writing white papers that explain, here's our view of this corner of the market, and here is where we think the pricing dislocations are happening and why those pricing dislocations have occurred. And so by doing that, you're giving the audience more visibility into how you're going to generate this alpha, rather than just saying, trust me, I've generated alpha in the past and I'll be able to outperform again in the future. Mm-hmm. So there certainly are ways to avoid this commoditization. And that's what I found more and more. A lot of the work I do with clients is really geared around how do you differentiate yourself in an increasingly commoditized industry.
I see. I've taken a couple of notes here from your conversation, and one thing that stands out is your ability to articulate your world view and give confidence to your listener on your ability to execute on that world view. That's like the most articulated definition of brand building that I've ever heard. Building your personal brand or your professional brand, that's your brand, right? Your voice, like Stephen Covey says in that book, The Eighth Habit. It's about, being able to communicate your authentic voice, your primary persona to the audience. So that's pretty exciting. That's very good to hear. And one other note that I took from this, Scott, is the empathy part that you mentioned, which is being able to walk your client to the difficult situations and having those conversations with them, and then tailoring the product or advice around those conversations. That's essentially something that cannot be done by, like an algorithm. Not yet, at least. And I don't know if it's ever going to be done. Empathy is very hard to replicate in an algorithm. So that's pretty awesome. I'm glad I have some breakthroughs right here in the first 10 minutes of the conversation. But continuing forward, what are some of the things that you concretely recommend for brands or for professionals to build their personal voice, to create that authentic persona and connect with their audience using content or any kind of social media? What do you recommend? What does that process look like?
Sure. And so I'm glad you used the word process there, because creating content or writing something is a difficult process for a lot of people. And I think people make it even more difficult than it needs to be because they don't have a process. Investors always talk about how they need to have a repeatable investment process. Well, I tell people that as a writer, you need to have a repeatable writing process. And so I found that if you break it up into finite steps, it really helps to simplify the process and focus your mental energy on the part that you need to be focusing on. So I'll walk you through those 5 steps that I recommend for most people in most sorts of content marketing or writing or thought leadership situations. And the first of those 5 steps is to define the target audience. And this might seem sort of intuitive, but a lot of people actually skip this step, meaning that they don't take the time to actually sit down and write out, here's who exactly we're talking to, here's what this person knows, here's what they don't know, here's what they care about, here's what they don't care about, and here's the problems that they're having right now. And so, for example, in the investment banking industry, if you might be writing a market commentary about deals that are getting done or how capital is getting raised, but if you're writing for an audience of business owners, they're going to have a very distinct point of view of the world that's different from if you're writing for private equity investors or other investment bankers, for example. And so the more that you can hone in on who exactly is the most valuable audience at the outset, the better you can shape what you're going to write to what that audience cares about. So that's the first step. The second step is to make sure you have a narrow scope for what you're going to write about. One of the biggest mistakes I run into with my clients is that they try to, quote unquote, boil the ocean in their thought leadership efforts, meaning that they try to take on a topic that's so broad that they can't possibly manage all those things or tackle all those things in an appropriate manner. So I tell clients it's much better to err on the side of being narrow than it is to be broad in what you're trying to talk about for your topic. And so again, we think about your topic and think about ways that you can narrow it to make it more differentiated or more specific, and that'll give you the freedom to say more interesting things within that topic. For example, if you're writing a topic or writing a piece about all of fixed income, you have to write at such a high level that it limits your ability to say specific things that make your paper interesting. Whereas if you narrowed it to just investment grade bonds or municipal bonds, you can dive deeper and really show your expertise within those narrow areas. The third step in the process is to make sure that you've allocated resources toward creating the thought leadership. When I talk about resources, the two I'm talking about primarily are time and money. A lot of times when people think about resources, they just think about money, but really time is just as important when it comes to creating thought leadership. I talked to a consultant the other day, and he was telling me and he worked at one of the large consulting firms, and he told me that at his previous company, his boss always encouraged him and said, you guys need to be publishing thought leadership. It's really important for us to build up this brand and to show our expertise out there through publishing white papers and other forms of thought leadership. But the boss never gave them any resources or time allocated to do that. These consultants had a lot of pressure to always be billing, and they didn't have any money to bring in external resources. So it was really impossible. It was an impossible request by the boss to ask people to do more thought leadership when they didn't have the resources to do it. So again, think about time and or money to make sure you have the necessary resources, because the worst thing you can do is start something when you don't have enough resources to get it done. That doesn't help anything. The fourth step in creating the thought leadership is to find your point of view. And what I mean by that is, if you're just talking about a general topic that everyone else is talking about, that's not thought leadership. That's just regurgitating things and showing that you're in the game and looking at the same things that everyone else is looking at. And in the professional services world and financial services, you're not going to get hired if you're just doing the same thing everyone else is doing. Again, it gets back to that commoditization and how do you differentiate yourself. So I really encourage or require my clients you have to first find what is your distinct point of view on this topic. How is what you're going to say advance the conversation? It's okay to pick up something that's being talked about a lot, but you have to take the conversation an additional step or in a new direction. And so how are you going to advance that conversation? And a good question to ask yourself when doing this is, or a good place to start in thinking about, well, how can I advance this conversation, is to start by thinking about what are the misconceptions that your audience has. Think about, from the clients that you deal with, what questions do they come to you with that show that they don't fully understand the topic, or what are the things that are really confusing them? And so if you start by those misconceptions and work backwards from there, that's a great way to make sure that you're talking about the topic in a way that adds value for the reader. And the fifth step of creating this thought leadership is to have a distribution strategy. A lot of people make the mistake of thinking, we're going to write the world's greatest white paper. It'll say everything perfectly about our point of view on the market. We'll have a very defined target audience. You can do all those things right, and it could in fact be a genius paper. But if it doesn't get in front of the right people, there really isn't much value to that. So you have to think about how you're going to distribute this paper once it's written. And there's a lot of ways to think about it. Lots of different channels out there, which is exciting because in the last decade, the world of distribution, the opportunities have expanded exponentially. There's a lot of different ways to think about it, but at a very high level, you want to think about what are your owned channels, or what channels do you own, and what are the earned channels. So owned channels would be like your website, your email list, your social marketing or social media sites, those things that you have direct control over. And there's a lot of opportunities, and so you want to be taking advantage of those. Again, it's not rocket science, but you want to make sure you have a plan for how you're going to be using these things. And then on the earned channels, that's where I'm talking more about more traditional public relation methods, or such as locating reporters that might be interested in it, or trade publications that are interested in seeing if there's ways for you to contribute the article or the white paper as a bylined article. Or anymore, there's a lot of really influential bloggers that your clients are reading, and so find or reach out to them and ask if you can be a guest blogger, and you can adapt part of your white paper to fit the needs of that blog. So there certainly are a lot of other channels to do, but those are some of the more basic ones and things that at a bare minimum you should be thinking about those things. And so again, it's kind of the tree falling in the forest, does anyone hear it dilemma, in that you could write the world's greatest white paper, but if all you do is stick it on a link on your website as a PDF and no one finds it, then what's the point of actually publishing that? So again, to recap the 5 steps, it's 1, define your target audience. 2, narrow the scope of your topic. 3, allocate the proper resources to getting that done. 4, find your distinct point of view. And then 5, figure out your distribution strategy.
Thank you so much for sharing that, Scott. I really appreciate you sharing your comprehensive process. One of the questions that I wanted to get out of the way before we go any further was, what are some of the techniques that you use with your clients, or you personally have used, to develop that unique point of view to improve your resonance with your audience, or your clients' resonance with their audience? If you can shed some light on that, that will really help.
Sure, and it's incredibly important to develop that voice or that point of view, like you said. And I'll give 3 tips or ways that I work with clients, or things that I'll suggest to clients to help draw that out and help us develop that voice. And the first one is to don't be afraid, or don't try to sound like a financial services firm. In our industry, there's a lot of pressure I think people feel to sound like a banker, to sound like a portfolio manager, to sound like everyone else. And I really tell my clients that the point of thought leadership it's not thought followship, it's thought leadership. And so you should be sounding different from your peers. That's the whole point of it. And so don't fall into this trap of thinking that, well, I can't say that because that's not how a portfolio manager would talk about it, or it's not how an investment banker would talk about it. You want to set yourself apart. And so, but you need to do it in a way that's authentic. And so your thought leadership to some degree should reflect the way that you talk to people. And don't be afraid to let that personality come through. Number 2 is you want to have that distinct point of view. So you want to make sure that you're always advancing the conversation. So you don't want to just pile on to a topic that everyone else is already commenting on. You want to find topics that are generating a lot of interest and then see how you can advance the conversation. So you don't want to, again, just comment on something because you know it's getting a lot of traction. Again, that's thought leadership. But you want to find those interesting topics and advance the conversation. Maybe you challenge something that's previously been said, or maybe you explain how something that's been said in other conversations doesn't quite get the whole point. And the third point for developing that unique voice, it's a very practical thing, but I found it's been very helpful, is to start your thought leadership brainstorming by thinking about the most common misconceptions that your clients have. What are the things that when you're talking to them the things that they explain to you, it's clear they don't understand the full story, or things that they might think it's one way, but really it's the other. And that space where the client is confused or misinformed, that's where you can really address those questions head on and set yourself apart as a real thought leader. And so again, don't try to sound like, number one, don't try to sound like everyone else in your industry. Number two, always focus on making sure that you advance the conversation. And number three, think about ways that you can, or any misconceptions that you can address, and any common questions that you can address. And that's really the most valuable form of thought leadership.
Yeah, it kind of goes back to your the 5-step process is, misconception, addressing that misconception. One of your first steps was around that, and that really helps get your audience's attention to start off with. So thanks once again for clarifying this. Scott, I wanted to ask, what are some of the results that you can share with us about this audience building and content creation process?
Well, I think it's kind of two ways to answer that question. In one sense, this process has allowed to create a sustainable and enduring form of thought leadership. What I mean by that is a lot of firms will set out for 2017 and say that we want to publish 4 white papers a year, or whatever the number is. It's easy to say that in November when you're planning for 2017. It's harder to actually get into 2017 and execute it. And so by having this process, it allows my clients to have a more structured way of coming up with ideas and then executing on those ideas. Because if you don't have a process in place, it's very easy for your good intentions in January to peter out once you get into that second quarter. It's like all New Year's resolutions. Easy to say on January 1st, but hard to execute. It's hard to get to the gym come April. Not the crowd at the gym is a lot watered down come April. And it's the same way with thought leadership. We'll see a lot of white papers coming out at the beginning of the year, but check back in August and see how many of those companies are still doing it. And so by having a process, it makes it a lot easier to commit to it and to keep it going, because then you're not staring at a blank slate every time. So that's probably one of the biggest things I've seen. And that's something I think people really underestimate when it comes to thought leadership is the project management aspect of it. It's, yes, you have to write well and come up with good ideas that are compelling and interesting, but you also need to have a process in place for getting these projects done. Otherwise, it's going to seem like this huge burden that's always lurking at the next quarter or the next month. And so having that process makes it a lot more manageable. And then from the client relationship side of it, I've seen thought leadership be effective in strengthening relationships in a lot of ways. And one way that's kind of surprising is that thought leadership can be a very good cross-selling tool. Wells Fargo obviously got in a lot of trouble for their using quotas and the cross-selling efforts there. And they got the huge fine. I think it was like $185 million. And there's all sorts of stories like that of financial services firms wanting to cross-sell existing products to their clients, and then using quotas, and those quotas backfiring or creating some sort of perverse incentive for the sales force. And what I tell people is that thought leadership is actually a good way to show those other services you can offer and explain the value of them without doing it in a salesy way that makes it seem like you're really trying to push product or push a service on your clients. And especially when it comes to newsletters, or newsletters might not be thought leadership in the traditional sense, but they certainly can be. And I really encourage my clients to use newsletters as a way to show the breadth of the services they provide. Maybe you can profile different types of clients and talk about the problems that they're facing. And so by doing that, it's a very non-pushy, non-salesy way to highlight the benefits of the various services that you provide. So not only are you strengthening relationships with existing clients and reaching new clients, but with those existing clients, you're expanding the breadth of the relationship, which is the holy grail of selling, is to get more revenue out of your existing clients. And so that's why when I talk strategy with my clients, I say, don't think of thought leadership as just a way to reach new clients, but also think about it as a way to strengthen and expand the relationships with your existing clients.
Very well said. Very well said. I'm going to make a quotable quote out of that. There is an interesting thought that you shared there, which is expansion of relationship is with your audience happens by sharing the thought leadership pieces that you come up with, and it's easier to build on existing relationships that way. Switching the gears a little bit, what I'm curious about is what is Scott excited about for the next 6 months? What's going on with his life, professionally or personally?
All right. Well, there's a lot to be excited about professionally. The business is growing. And so in my type of work, the challenge is always, well, how do you scale it? It's easy to be a one-man shop and a one-man writer, but how do you take those efforts and get more leverage out of the expertise of myself as a writer and the other writers on my team? And so that's the point that we're at, and we're some exciting challenges there. But in terms of the types of things we're writing about, it's a very exciting time to be a writer in the financial services industry. We're recording this in November. Donald Trump was just elected, and regardless of what you think of him, if you think he's the worst thing that ever happened or the best thing that ever happened, there's no debating that he's one of the most interesting things to happen. And it's certainly the case in the financial services world. He's already proposed big changes to tax laws, a lot of changes to the regulatory environment with the Consumer Financial Protection Bureau, maybe recalling the fiduciary rule that's set to go in place for financial advisors in April. And so there's all sorts of dynamics that if this proposal were to be enacted, would create this whole series of changes. But we're at the point right now where we don't even know what those proposals are going to be. And so the reason this is exciting for me as a writer is that there's more need in times like this, in times of uncertainty, in times of change, there's more need than ever for financial services companies to get out in front of these changes and explain what they mean for their clients, and to explain how some of the things that you might be reading in the press don't quite tell the whole story. So here is the whole story, and here's what's really going to happen, or here's the thing that's not being reported. And as a writer, that's really exciting for me, because that's where you feel like you're really adding the most value, and you're unweaving some of those misconceptions that people might have. So like I said, with Trump and the Republican-controlled House and Senate, there's certainly going to be a lot of changes. The jury's still out on what those changes will look like and what the impact will be. But I feel like the smartest financial services firms are going to be at the forefront of explaining what those changes mean for their clients.
Going where the putt is, instead of reacting to it. Yeah. So on that note, I'm going to switch things up a little bit and go into one of my favorite portions of the podcast, which is a round of rapid fire questions related to data, marketing, analytics. So my first question for you, Scott, are you ready for it, by the way?
I'm not sure. I guess we'll find out.
All right. We'll see. My first question is, if you could put one analytics or data related billboard anywhere and with anything on it, what would it be and what would it say?
Let's see. I think the billboard would go in Lower Manhattan, right outside the New York Stock Exchange, so the epicenter of the financial universe. Be a big billboard, and it would be very simple. It would say, data does not equal insight. And the reason that I feel like this billboard would be so important for the investment bankers and the traders and all the financial professionals there in Lower Manhattan on Wall Street to see is that I think a lot of people make the mistake of thinking that for their thought leadership, we're just going to send out a bunch of data. We're going to overwhelm our clients. We're going to impress them by showing them how much data we can send them. But really, what makes you look smart is by taking that data and then culling it down to what is the insight that really matters for the client and adding your color commentary to that. And so I feel like if the financial services world could get smarter about not just dropping a lot of data on people, but saying, here's the thing you should pay attention to. Don't get distracted by all these other numbers. Pay attention to this number because this is the number that matters. And here's why it matters. I feel like they would be doing a service to their readers, to their clients. And I think it would make a much more educated and insightful consumer base.
Interesting. Second question is there a data or a decision product that you have purchased in the last 6 months that was about $100 or less than that had a positive or negative impact on your life?
Yes, it's a very unsophisticated tool, but it's a data collecting tool nonetheless. It's called Hours Tracker, and it's a pretty basic tool for tracking my hours. But I work in a services business. I'm a services provider, and essentially the inventory that I have to sell is time. So I realized I need to get more rigorous in tracking the time that I spend, that my teammates spend on different projects, for us to really understand how profitable a project is and are we spending our time in a smart, efficient way? Because I talked earlier about the need to scale, but before we can do that, we need to figure out how are we spending our time now? What's the most efficient use of it? And how can we continue to streamline that? So again, it's called Hours Tracker, and it's an app for the phone. There's also a desktop version. And so it does a good job of allowing you to track your time, assign it to different projects, and then look at the end of the month at the analysis of seeing where you spent your time.
Interesting. Yeah, I like that. I like that app. I've used a similar version of that. And I have to say, you'll be very surprised when you start looking at your own behavioral economics of how you spend your own time. For me, it was around my obsessive email checking habits. And I think I was able to address that pretty quick. Thanks for sharing that. So next question for you, Scott, is when you think of a data person, when you think of that person as being successful, who first comes to mind? And if I may ask, why?
Well, I'm going to say that the people who founded the company HubSpot come to mind initially when I think about digital marketing. HubSpot's a company that does marketing automation, or it's an all-in-one platform for various inbound marketing tools. And they've really taken this theme of inbound marketing and really ran with it and really built upon it. And the company's gone public. It's doing really well. It's a nice tool. There's certainly other tools like Marketo that do very similar things. I've been impressed with the way the company has been able to create this concept and really impress upon the idea that as marketers, we shouldn't be in the business of interrupting people. And it gets back to time. Our time is limited, and we're getting bombarded with so much information that as marketers, we don't want to add to that noise, and we don't want to add to and just be another form of interruption and try to cram our way into our audience's center of attention. But instead, we need to be creating information and content that attracts our audience and finds people that are actually looking for those solutions. And as a writer, I feel like that's the most important thing. It's a very important lesson. And whether you want to call it inbound marketing or content marketing, whatever it is, this idea that our audience is so pressed for time and so pressed for attention that we need to be very rigorous in focusing on ways that we can add value to earn their time and to earn their trust. So again, when I think about those data-driven marketers, the folks at HubSpot, I think are doing a really good job.
Thank you. Thanks for sharing that. I love HubSpot. Their CEO is really following your content blueprint very well. I can say that. Did you consult with them? It's like they're pumping out content very effectively.
No, I did not consult with them. They managed to build that multi-million-dollar company without my help, amazingly. But I think they know what they're doing, and so. But they're very good at content. They definitely eat their own cooking.
Yeah. I have another question for you. A couple of other quick questions, which is in your data-related book collection, which book do you often go back to the most? And it doesn't have to be data-related, but you got the point. It has to be analytical.
Sure. I would say the book Moneyball by Michael Lewis. And I'm sure it's one that a lot of sports fans that are interested in statistics and analytics have read, and it's sort of become their Bible. But the reason I like it so much is that it's about the general manager of a team, the Oakland A's, that had a limited budget, and how the A's realized that in order to compete, they had to identify market inefficiencies. And that's essentially what a portfolio manager does as an investor. If you believe in this efficient market theory, you realize that things are priced pretty evenly. And so to get an edge, you have to be really rigorous in finding the small areas where things aren't efficient. And so Billy Beane, the general manager, was able to do that by not just being better at looking at data, but more specifically, he was able to realize that a lot of teams were looking at the wrong data. They were paying attention to the wrong statistics when evaluating players. And so I think that's a really important lesson for us to learn, is that regardless of what field we're in, don't fall into the trap of assuming that because these are the common metrics that people look at, these are the ones we should be looking at, or these are the ones that matter. Because a lot of times the ones that are common they're common just because they're easy to create and it's relatively convenient to get that information. But just because information is available doesn't mean it's useful. And so I appreciate people that are willing to challenge the status quo and focus on finding out, all right, what's the information we should be paying attention to, not just the information of what's readily available and commonly used.
Yeah, that's asking the right questions is more important than going down the whole rabbit hole of answering irrelevant questions. So thanks for sharing that. I can totally appreciate the reason why you go back to that book the most often. So one of my favorite questions, Scott, which is the following question: which story do you use most often when you're communicating to the C-suite about analytics or data?
Well, it's maybe not the one I use the most often, but I think it will be, or it's one that'll resonate with a lot of people. And that's a story about the importance of not assuming data is infallible. And if you look back to the election back in early November, a lot of the polls had it dead wrong. They were quite wrong. And it was very easy for people to just regurgitate what they heard from other pollsters and what was being reported in the media. And I was no different. I was just assuming that Clinton would win because I saw the same polls that everyone else was seeing. And so I just assumed that was what the outcome would be. And realized that there's maybe a garbage in, garbage out problem, and that maybe the poll is wrong, or maybe the way they conduct them is broken. And so I think, even though I wouldn't say it's my favorite story right now, but it's one I think will get a lot of mileage though, and it'll be resonant with people because there is a very recent, real, tangible example of how you can't put too much faith in data unless you're sure that the data is sound. And so don't allow the data to have more power than it should. You have to, accept some data with a grain of salt and realize that there's limits to our ability to collect the right data and to analyze it accurately.
Yeah, this reminds me of a program at Berkeley in data science. One of the things that they hammered in our head over and over was not all data is created equally. Thank you for sharing that, Scott. If people want to get in touch with you and learn from you and consult you or get your advice, what's the best way for them to do that?
The easiest way is probably LinkedIn. I'm on there quite a bit and meet a lot of great people and share a lot of insights on there. So look me up on LinkedIn, Scott Wentworth of Wentworth Financial Communications. Another great way is just to email me. So Scott@wentworthwriting.com. So it's Scott@WentworthWriting.com. I wanted to add that for your listeners, I knew we went through a lot of things and there's a lot of information to process. So I went ahead and I put together a short little document that outlines a lot of those tips that I talked about, and it details this process for creating a great white paper and creating thought leadership. And so I've created a landing page that aggregates a lot of the resources that your clients or your listeners might be interested in checking out. That link for your listeners it's info.wentworthwriting.com/data-leaders. Again, info.wentworthwriting.com/data-leaders. So again, if you go there, check it out, you can get this free list of outlining the process and a bunch of other resources that I think will be helpful as you think about your thought leadership efforts for 2017.
Thank you. I appreciate you putting together a special report just for our audience, Scott. I really appreciate that. I'm sure there's going to be a lot of questions around this, so people will reach out to you after this podcast. Once again, thank you so much for being on the show, and all your show notes about your contact information, the link to your special page with the PDF, and all of that will be on dataleaders.io/Scott. it will be on dataleaders.io. So you go there and you will see Scott's picture, click on that, and you'll be seeing all the resources that we just discussed in this podcast. So that's that. Once again, Scott, this was fantastic. Thank you so much for being on the show. You added tremendous value to our audience, and I'm very grateful to you for doing that. Looking forward to have you back on the show to catch up with you on more of your adventures once you have more time.
Well, I'm looking forward to it too, and thanks for having me on, Naval.